Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2023 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small-cap companies with high-quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is yet hopefully another example where we can bring value to multiple constituents. Our next presentation comes from LiveWorld, ticker symbol of LVWD. That is Lima Victor Whiskey Delta on the OTC Pinks. Presenting from the company today is its founder, chairman, and CEO, Peter Friedman, and its CFO, David Houston. Today, I've asked Peter and David to briefly run through the slide presentation, and we will then engage in a fireside-like chat Q&A discussion. We will dive into the discussion in a moment, but one final item, I want to remind everyone that LiveWorld is available for one-on-one meetings. If you have not already signed up, please send me email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual and click the one-on-one meeting request button. With that said, let me now turn the presentation over to Mr. Peter Friedman, founder, chairman, and CEO of LiveWorld. Peter, please proceed.
Thanks, Adam, for having us. LiveWorld is a social-first digital agency, and as Adam nicely introduced us, Peter Friedman, founder, chairman, and CEO, and David Houston, our CFO, is with us as well. First, we have to start with our safe harbor statement, so here it is. And then what we'd like to begin with is to give you an overview of our business and an overview of the financials, and then we'll go into more detail. We're a full-service digital agency with deep expertise in each of creative, technology, social media, and compliance. Essentially, we create digital marketing campaigns for our Fortune 500 clients and manage their social media presence. Our focus is creating emotional connections between the brand and the customers and building relationships that are the basis of meeting clients' specific objectives in each of marketing, customer support, and actually healthcare outcomes, because a lot of our clients are healthcare companies. What we do is a mixture of creative, and that's about 20% of our business. Here we're producing digital marketing campaigns, and that comprises all these elements here: research and strategy, design, concepts, regulatory compliance associated with that. This reflects our recent expansion into being a full-service digital agency. Moderation is about 70% of our business. It's a high-margin annuity revenue stream in which we manage user content on the social media of our clients. This includes adverse events management for pharma companies, keeping our clients' social pages clean from bad content, and actually interacting with our customers to build marketing awareness and drive sales. The third part is technology. Here, we get paid to provide a software SaaS platform, which either we or our clients use to manage user content online. We also provide apps for digital marketing campaigns, and our work also includes some AI technology, which we have in our technology and are expanding. And this is currently about 10% of our business. And again, it's an annuity revenue stream. Perhaps the strongest statement of the value we provide day to day and long term is reflected in the longevity of our clients. 16 years with American Express, 13 with Pfizer, over 9 with each of Zoetis, Bristol Myers, and FedEx. Today, we actually work for 75 different brands spread across about 25 corporate clients. And a lot of our business is in healthcare. We've built that up as the primary focus of our business, and we're quite strong in it. Today, we manage over 350 healthcare social media properties, and we deliver over 90,000 hours per year of healthcare moderation, adverse events management, customer support, and engagement.
Let's talk a little bit about our business model. Our business model is very much focused on value. We create enough value for our clients that they're willing to pay us more than it costs us to actually do the work. Now, this may seem like a very basic and obvious business model, But when you look across the digital social landscape, there aren't too many companies that say that they're doing this. We've got valuable relationships with our clients, and this enables us to maintain strong gross margins. Our revenues are mostly consist of annuity streams, annual repeating moderation contracts, and SaaS software licensing. Even our digital agency work is mostly ongoing retainer work that repeats year to year, and it's not one-off projects. It's that agency work that creates a strategic relationship with our clients. This then pulls in the even higher gross margin and more annuity-like moderation and SaaS software. And we also have scale, particularly in moderation services and software. So over the last few years, we decided to focus on a vertical market, specifically healthcare. This focus, combined with our unique solution set, has propelled our growth, with healthcare now making up approximately 90% of our total revenues. Currently, we work with the top pharma companies in the world and a major pharmacy chain in the United States. We believe that additional work from our current clients and adding new clients in pharma and medical devices can support our growth for the years to come. And then we could see ourselves expanding into other verticals, such as financial services or CPG. Let's give you sort of a review of the sort of financial results over the last few years. But before we get into that, I'd recommend everyone go to our LiveWorld IR page and download our reports. We go into much more detail in the Q's and K's there. LVWD, that's our ticker symbol, and we hope you get to know it. And we are compliant with the SEC 15C211, so we are freely tradable. We've seen on the top line revenue growth of approximately 16, 18, and 11% over the last 3 fiscal years. Importantly, we're seeing growth in all of our solution sets: creative, moderation, and technology. Now, looking at the overall P&L, we can see that as we've grown, we've been keeping our operating expenses in line. This resulted in improved net income over the last few years, and we've improved our cash position from $730,000 at the end of 2019 to just over $3.8 million at the end of 2022. And you can see that we're debt-free, and we maintain that annuity revenue stream, which makes up about 70% of our total revenues. So let's take a look at the Q2 results. You can see that we finished Q2 with almost $3.1 million in revenue and a net income of 5% or $164,000 for the second quarter. And you can see that we've been able to maintain that double-digit growth on the top line and the net income. So the next slide, for the 6 months, you can see that we ended with approximately $5.8 million as compared to $5.2 million for the previous year. And again, our profits grew from $261,000 to almost $300,000 period to period. We've been able to maintain our double-digit growth in revenue and profits for the first 6 months of 2023.
Now let's take a look at a deeper view of the actual solutions, what we actually do. Our solution is comprised of 3 elements, which each can stand alone, or they combine to bring the clients even more value. These are creative, moderation, and technology. And again, that we do all 3 is very unique. We don't know of any competitor that does all 3. The creative takes the form of digital marketing campaigns that are the inspirational call to action for audience to get their initial awareness and educate them and kind of get them to pay attention. It also sets the context for the moderation and technology parts of the solution. A real critical dynamic in healthcare is these companies need to be compliant with different regulations. That's how many of these companies back from being innovative and really creative in their advertising and marketing, just when the market is demanding more customer-centric marketing. Just like the computer industry had to go from like kind of a very data corporate approach to more consumer-centric marketing, so does healthcare. We bring a very different approach to this with talent and expertise that allows our clients to be creative and be different in their marketing and still be compliant. And that's really important to them, and that's a big opportunity for us. The creative and the associated strategy work also puts us at the center and the heart of their business objectives and strategy planning. That's important because it's how we build the strategic relationship that helps us get all the other business. Let's move on to moderation. Moderation is when our live human agents, supported by technology, including AI technology, Protect the brand by reviewing and removing problem content. For healthcare, this is the core of compliance. We have creative as the foundation, the inspirational call to action, but then moderation is what actually sparks the conversations that build the relationships that drive the revenue. From this, we also get insight and ideas which circle back to creative and strategy so they can reform the campaign or figure out what to do next. A really important aspect of this that makes moderation a fundamental must-have for pharma companies is adverse events. Pharma companies can't operate social media without it. Literally, you cannot have a social media page or presence if you're not doing adverse events moderation. That's because they live in a regulatory environment where the Food and Drug Administration requires that all adverse events they come across are tracked and reported. And the slide actually has the beginning of the actual regulation from the FDA that says you have to do it. You might wonder, well, what's an adverse event? That's when somebody says they're having a problem with the drug, or somebody starts talking about using it in a way that we call off-label. It's counter the instructions. They mixed it with something, or they took too much, or they did whatever, and that's off-label. That's an adverse event. Any comment like that that appears on a pharma company's Facebook page, their Instagram gallery, in response to a Twitter comment or an ad, that has to be marked as such, tracked, and then reported through the company to the FDA, in some cases in 24 hours. If a company doesn't do this and they get a letter or a phone call from the FDA about it, that could actually lead to the shutdown of a multi-tens of billions of dollars business. So it's critical to the pharma companies, and that's something we do. We do it really well. That's critical to them. The third piece is the technology. The technology enriches all these connections and enables us to scale the moderation and the customer experience and the compliance aspects of it. So remember, they got to be creative, but they got to be compliant. They have to be on social media, but they have to be compliant. And we have process and strategy for that, but our technology is critical as well. So first, we license a SaaS platform for moderation and engagement, and that's an annuity revenue stream. And second, we build apps and bots as part of their digital marketing campaigns that we produce for them. And we use the technology to collect and analyze the data to further inform the creative, the strategy, and the moderation. So each of these pieces can stand alone, but they each bring value to the other and make them stronger. Our technology is primarily built in-house. It's proprietary. It's a highly leveraged platform model, which means we can reuse the same tech for across different clients. So, build it and get revenue and revenue and revenue. We can also scale it, and includes AI aspects today. And as we build more of that, we'll include even more tomorrow.
Let's take a look a little bit at the market opportunity for us. Next slide. This is our slide that says that the market is massive and we have great opportunity. And that's exactly what it means. The most recent report says the marketing spend across healthcare sector is approximately $30 billion, with pharmaceutical sector making up about $16 billion and medical devices another $2 billion. Our marketing experts have informed us that there are approximately 3,000 separate pharma companies and 1,600 different device companies we could be working with right now. Now let's take a look at sort of the LiveWorld healthcare related revenues. Our healthcare related revenues have grown from almost $6 million in 2019 to almost $10 million last year. Importantly, this growth is coming from not only new client acquisition, but also growth from our existing client base.
We often get the question, can you grow this? How do you grow it to 20 million and beyond that? Well, this is how we do it. Our revenue grows in stages. It generally starts with a smaller sell-in. That could be a creative project, it could be moderating a couple of pages, or a tech licensor project. That could be anywhere from $25,000 to a few $100,000 on the initial sell. Whatever we've sold, once we got that in, we can then pull along or upsell to the other solutions. For example, we pitch a creative digital agency RFP, and then we add moderation. Now, we bring up moderation partly because it differentiates us from other agencies because they don't really have it, and partly because it can increase the program revenue in the sell-in or as an upsell. One example is it was about a $200,000 deal. We moved it to about $300,000 because we were able to add moderation. Another example, we added $250,000 because it was an upsell for moderation. As our programs do well, then the brand will expand with us, adding more social media pages for us to moderate, or more user seats in the SaaS software license, or a bigger creative program. That can move the revenue up to a few $100,000, or in some cases to well over $1 million a year. Once we're in one of these big corporations, another key revenue growth driver is getting work with more brands and other groups in the company. That can add $150,000 to $1 million per additional brand, bringing the total revenue for that one corporate client across multiple SOWs to anywhere from several $100,000 to multiple millions of dollars per year. And I'll give you some examples. Let's take AbbVie. We began with them a bunch of years ago with moderation of just a few social media pages, say a Facebook and Twitter page for one or two brands. Then we added more channels like Instagram and LinkedIn for those same brands. Then more countries for those same brands. Then moderation for more brands, including Allergan, which AbbVie acquired. Once that relationship was a track, we were able to go to the client and say, hey, Synthroid, we do moderation for you. How about a crack at some creative advertising? And they let us do it, and that was good and was successful. That gave us the credentials to sell creative programs to whole other brands in AbbVie that we had never met before. And between all that, over 7 years, our revenue with AbbVie went from a first start of a few $100,000 a year to millions of dollars per year. Let's take another example that is a more recent one. Nutritia. We started with Nutritia's Neocate product. This is a product that's a specialty formula for kids who have very profound food allergies. And we did the creative for their social media advertising marketing campaign. Next, the Neocate group had a new product called Splash, and they asked us if we could help launch that, again, with digital marketing, banners, micro websites, emails, programmatic ads. And we continued to grow by adding another brand at Nutritia called Real Food Blends. And after that, we closed ProStat and another brand just recently called Suvinade. And that latest program isn't just creative, we were able to add in moderation. By offering like this range of solutions, so we could sell one thing and then sell another and then add another, and expanding across groups once we're in a corporation, we've been able to grow our nutrition revenue such that we doubled it every year. And based on our ability to grow the business this way through new brand acquisitions or expanding, that's how we grow the company from around 11 million to over 20 million in several years. Just as an example, this is how it generally works. We add a handful of new clients each year, say 2, say 3, something like that. Could be more, could be less, but they're each a few $100,000 a year. Then the next year, we follow up by building that and becomes an annuity revenue stream. And then the next year more. So every year we want to add a few, but the bulk of the revenue is coming from expanding the current ones. So it just keeps growing and growing and growing. And again, that's how we get from roughly 11 million to over 20 million over a certain number of years.
So let's talk a little bit about the shareholder value. Next slide. I know some investors don't like to hear management say that you're undervalued, so I'm not going to do that. But if you'll indulge me, I'll touch a little bit on some of the current fundamentals. When you look at a comparable services company, a conservative valuation metric would be 2 to 3 times forward-looking revenues. Now, we don't provide that sort of guidance right now, but if you look at our trailing information of 11.1 million and $1 million in net income and over 3.8 million in cash with no debt, we don't even reach 1 times revenue. At a recent share price of, say, 17 cents, and with our roughly 46 million shares outstanding, this results in a market cap of $7.8 million, which is roughly 0.8 times revenue. We have almost $5 million in cash. So if you remove the cash from the enterprise value, it's only 2.8 million, or approximately 0.3 times revenue. Our goal is to bring the valuation in line with our actual value by continuing to deliver our unique value to our clients, growing our revenues, and now communicating our story to the investment community. Next slide. So the shareholder path to value and liquidity. A few years ago, we made a conscious decision to focus on healthcare and expand into a full-service digital agency. So before coming back to the investment community, we wanted to demonstrate the value of these decisions and that we could grow the revenue and be profitable. Now that we've done that, we're stepping up our investment communications in 2023 and 2024. We're looking to engage in the investment community, and when the time is right, we're going to move up the OTC or to NASDAQ and become a SEC compliant company. We'll continue to grow our current market segments and add new ones, and we'll also consider growth through acquisition. Now here's our last slide, and we'll open up for any questions. So investment highlights. We've got strong client base, primarily Fortune 500, long-term client relationships, one for 16 years, one for 13 years, a number for 9 years. We've got a proven business model, providing key digital marketing services and technology to our clients. We have a recent track record of growth and profitability. Over the last 14 quarters, we've improved our revenues, profits, and cash from operations. And the growth opportunities there. The healthcare market is massive and expanding, and we have the ability to upsell services and expand into other brands and large corporations. We primarily have recurring revenue streams. Again, that's about 70% of our total annual revenues right now. And we've got a very strong balance sheet with approximately $5 million in cash and 0 debt.
Well, we'd like to thank you for your attention. I hope you have learned more about LiveWorld, how we differentiate, how we plan to grow. And now, Adam, we have time for questions if you like.
Great. Thank you, Peter and David. LiveWorld has an amazing client roster. You mentioned several of those blue chip clients in your presentation. How was LiveWorld able to attract these companies, and how did LiveWorld find them, or did they find you?
Well, the critical element to that is this focus on value and really building long-lasting relationships. Far and away, our number one source of new clients is referrals from existing clients. We make happy clients that see the value, they tell other people. Sometimes a client contact moves on to another company and they take us with us. Then the next thing is events where we meet people and can actually have them meet us and understand us and get an in-depth discussion of who we are and what we can do for them. And we support all that with a bunch of outbound marketing in social media, of course, and digital and that type of thing.
LiveWorld has a great toehold in the healthcare industry, particularly in pharma. How many more companies could LiveWorld potentially work with in this industry that you aren't working with already?
Well, there are literally thousands of pharma companies that we could be working with and can benefit from our solution set. As I mentioned earlier, there's approximately 3,000 pharmaceutical companies we believe we could be working with, and 1,600 different medical device companies we could be working with.
Can you discuss a bit about marketing budgets right now, especially within the healthcare space? Are they shrinking? Are they staying stable? And are they being refocused on services like moderation, which LiveWorld specializes in?
Well, it varies. In any one year, any particular company may increase or decrease their budgets. Generally, marketing budgets for social media have been on the rise in 2023. Even when overall marketing budgets get cut, there tends to be more of a shift to social media because it's more effective and more cost efficient than other forms of marketing.
How has LiveWorld's business changed since the emergence of social media?
Of course, we've been social media centric and before that online community centric since we started the company 27 years ago. But the rise of social media, meaning like channels like Facebook, really took hold about 14 years ago. That really expanded the market for our solutions because, it became more ubiquitous. So we went from, a couple 100 million people around the world engaged with online community and that type of thing to, about 4 billion now. And brands moving from innovative and experimental to, social media is just like online and the largest growing segment of their marketing budgets.
Are there any other industry verticals like pharma, which are highly regulated and would benefit from the services you currently provide? And if so, which ones?
Oh, totally, for sure. To begin with, other healthcare segments like medical devices, hospitals, clinical trials, and insurance companies, which we call payers. Also, other regulated industries such as financial services, which we actually have a long history in and currently count American Express as a client. Really, I'd say also any other market segment that has a customer set that has sensitivity to the nature of the set of the products. Consumer packaged goods is a good example of that. Now, we're trying to maintain a vertical focus because we get a lot of leverage out of that. So we think healthcare is really where we're going to be driving it proactively for a long time. But there are these other segments that we will go after sometime in the future. But right now, we can make all the money in healthcare. And of course, people come to us that are in other segments. We don't turn them away because we have a lot of experience in a lot of market segments.
How's the visibility on your business? It seems like in the near term and the long term, it's very good. Are there any seasonality issues to be mindful of?
Well, visibility for us is similar to other companies, and it can be a little tricky. Short term, it's very good. As I mentioned earlier, our business model is annuity based with annual contracts. So over our fiscal year, we don't see too many surprises and we know what's going to be happening. However, long term, it's more difficult, and depending upon sort of the broader markets and volatility, it's not that easy to see where things are going to be going. With regards to seasonality, that has more to do with getting contracts signed and being able to get invoices and recognizing revenue in the first part of the year. So that's kind of where we see a little bit of what you could consider seasonality.
Are there other digital marketing services the company can provide or is thinking about providing to your existing customer base that can act as a growth catalyst?
Well, first, in the last few years, we expanded to be a full-service digital agency. So it was just social, mostly moderation and tech and strategy around that. Now it's the full gamut, with the main emphasis being on creative strategy and creative, like what kind of ads are you going to run, or the digital marketing materials, and that's gone very well. We've gone from nothing to millions of dollars a year, just that. Now we're putting an additional emphasis on a wider range of digital agency solutions, either providing them in-house or through partners, which is the normal way you do it. Media planning, for example, and buying is one of them. And then more work in SEO, influencer marketing, some things like that. There's quite a bit. And some of these are just expanding, and some are bringing in-house instead of using partners.
So how should investors think about, how large your business can grow to, and how do you get there? Can the company get to 20 million in annual revenues?
Absolutely. The market opportunity for us is huge. We believe we can grow the company to tens of millions of dollars in revenue per year organically. And then more growth through a combination of organic and acquisitions. Our core approach is to bring in a few new clients each year, grow those annuity streams year to year. And then we shifted to healthcare about a few years ago, and that gave us about $10 million in profitable revenue with this approach over the last few years. So we've proven that we can actually grow this business. Going forward, we should be able to continue that with this approach with similar results.
Can you discuss your outlook for the remainder of the year, and as the balance sheet continues to grow, are there eventual plans for your excess cash?
Sure. For 2023, we anticipate seeing continued growth and profits from our operations. Now, regarding this sort of idea of excess cash, we get this question from time to time, and we don't think that we actually have excess cash. We're looking at investment opportunities to grow the company for the long term. So for 2024, we're going to be investigating AI, how it plays in our space, and how we can use it to grow our top line revenue. Currently, we're looking at how we can expand our revenue growth by adding new services, as Peter mentioned. Currently, we're investigating influencer programs, SEO, and media placement. Once we determine that plan, we'll look to invest in one or more of these in 2024. And again, we're looking for long-term revenue growth for the company.
Great. Anything else you want to add before we conclude the discussion?
Well, just again, that LiveWorld's about creating value and real value, and sustainable company over the long term. and we've done that. And that's value for our clients, for our employees, and our shareholders. Value is how we survived when others didn't. It's how we have thrived. And for people who are interested in focus, a company that is value focused, we'd be delighted if you joined us on our journey.
Peter and David, thank you very much for your time today. We greatly appreciate it. To anyone out there that's not already signed up for a one-on-one meeting, again, please send me an email at lowensteiner@lythampartners.com, or you could go to www.lythampartners.com/virtual and click on the one-on-one meeting request button. We hope you all enjoy the conference. Thank you.